And good afternoon. Welcome into a Tuesday, November 24th edition of Market Talk. I'm your host, Jesse Allen. Great to have you here with us on the program. MarketTalkAg.com. That is where you can find us online, MarketTalkAg.com, or on Facebook, Twitter, Instagram. It's all at Market Talk Ag, Spotify, Apple Podcasts, Amazon Audible, iHeartRadio, and so many more. Let's dive into this market trade today. A fairly quiet day as we near towards Thanksgiving later this week. Let's bring in Matt Bennett. He is with agmarket.net. Matt, how are you today, my friend?
I'm doing great, bud. How are you doing?
I'm doing fantastic. Appreciate you being on the program with us today, Matt. And let's jump right into this market trade. Yesterday was a really good day. We neared that $12 mark at soybeans. We tapped it a little bit, fell back at the close, but still a good day. And now closed today pretty quiet, really just kind of hung around that unchanged mark, which I think a lot of us probably expected with the holiday week here, a shortened trade week. But what did you see just overall out there today in the corn and soybean markets?
Well, interestingly, to start out the week, we had a lot of excitement on Sunday night, talks about, moderately higher trade due to South American dryness, continued actual dryness, as well as forecast of, just below normal rainfall. And so, the trade got a little bit excited on the open. We saw January beans trade up to $12, back significantly off of that and settled, with double-digit gains, which was pretty nice to see as far as the front months were concerned. Coming here on the overnight on Monday night, and you look, and all of a sudden you've got double-digit losses on beans, and corn's trading down 5 or 6 at one time. The start of Tuesday session in the morning, similar type of trade, but man, they clawed back as the day went on. The wheat market, I think, definitely lent a helping hand there. We saw double-digit gains as far as the soft red markets goes, for, the Chicago wheat market. And then, you look over to corn and beans settled with a slight gain, first of all. Second of all, corn settled basically unchanged, up, down, just a shade, basically a penny on each side of unchanged. So I actually really liked the trade today in that it sure seems to me that some of these funds decided they were going to certainly defend their position. Was there profit taking going on earlier? I'm sure there was, and a lot of that was due to cancellation of shipments. As far as China's concerned, some of the crushers were talking about canceling a few cargoes. That's something that I think all of us have expected to happen at some point. It's just a matter of what the magnitude of that might be. But, I probably got more to say about that, but I don't want to sit here and talk the whole time. I'll see what you have to say now.
Well, I would agree with that. I was pleasantly surprised with today's trade, and I think very happy to at least see the clawback, as you alluded to, because obviously a lot of traders are wondering, can we break through this $12 mark at soybeans? I've heard that 1208 resistance, that old high that we had. And on the corn side too, can we keep pushing, and head towards 450 on the futures market? I think a lot of producers are anxiously waiting to see if we can do that in both corn and beans. And I think it'll be interesting once we get past the holiday if we could find that.
Yeah, and I think it's, one thing I'll tell you is that our ag market team, and I know you talked with all of us, we do webinars on Mondays, and we go into an extensive outlook on, what's the technical makeup here. And so that 1208 high, if you bust through it, there's pretty decent, I wouldn't say it's a likelihood, but there's a lot of air above 1208. And so if you break through 1208, you start to open the discussion to, maybe 13, 14, up 14 and a half beans. And so, are we going to be able to go to levels like that? A couple of things are going to have to happen. First of all, as far as Chinese cancellations go, my experience in my career has told me that whenever they cancel cargoes, it's because they're ready to buy more beans. They just want to buy them cheaper, than what they had them purchased at previously. You could say I'm crazy there, but precedents shows all of us that the Chinese are very likely to step in and buy more soybeans closely behind any sort of a cancellation talk. And, given the fact that they keep rebuilding this hog herd the way that they have, I mean, it's a rapid expansion. They've got to feed them something. We all know that, and so we know that their appetite for beans and for corn very strong for the time being. The other thing that has to happen, to get beans up to those levels, in that neighborhood, if you will, obviously is going to have to be, what's the South American weather going to look like? And so, a couple of the different meteorologists that we follow very closely feel that this La Nina is strong enough that it might be tough to break out of this trend that they're in. It's very abnormal to see the South Americans having, major dryness issues. It's a rainforest in parts, which lends credence to the fact that they're able to, whip up moisture, maybe on a little more frequent basis than we would see here in the U.S. when we get dry. And so there's a lot of skeptics. There's no question. But if they do stay dry, Jesse, I'm telling you what, the rest of the world is going to be heavily reliant on U.S. exports, and we're going to run out of beans. That's all there is to it, if they have to rely on us much more than what they already are. And I believe the corn situation is tighter than 1.7 currently. And so where are we at? I think we're 1.5 or below. And if that's the case, I'll tell you what, if people have got to buy a whole lot more corn off of us, this could get really tight. And given the fact that the Ukraine's not going to be exporting a lot of corn on the world market, I just think that there's some exciting stuff that's going to be ahead, especially if the Chinese keep purchasing and if South America stays dry.
Yeah, and those are two big things we're going to be watching the next few weeks, and as we head into the new year. And Matt, I've heard from some producers this week. They're kind of watching the markets. They're not really doing a whole lot of activity with the holiday week. They're just kind of keeping an eye on things in case something really drastic happens. But for the most part, I've heard a lot of producers saying, I'm waiting to see if we can reach some of these targets that you mentioned before I decide to make any sort of sales. But I've also heard the differing camp of that saying, well, you know what, I got some profit to take here. I'm at least going to get a floor underneath me right now.
Yeah, I was on Market to Market this past weekend. And one thing that I told Paul on the show is that there's nothing wrong whatsoever with going ahead and booking some sales. And if you want to stay in the game, do so in a limited risk position. One that your shirt's not going to get taken off your back, if you're wrong. And so right now, if you're looking at pretty close to $12, especially with those that are seeing overs, and I'm seeing overs, as far as, a positive basis, if that's the case for you, then you're staring at $12 cash beans right now. If you sell $12 cash beans and then you spend 20 or even 25 cents on a strategy, your worst case scenario, if the strategy is set up again in a quantified risk situation, your worst case scenario is 1175, 1180 beans. That's your worst case scenario. Best case scenario, this thing marches up and you take another dollar and a half, whatever it is that you've chosen to do for a strategy. You've got the opportunity. And so I don't see anything wrong with kind of being skeptical as always go through on doing a whole lot. But at the same time, when you've got major profit on the table, sometimes sitting here and doing nothing is just as risky as trying to do something, trying to do too much. And so I just want to take risk off the table as you rally. We have to know as the market rallies, we have more risk. I mean, that's just the way that it is, because there's risk on the table. It's just like playing poker. If we get up a bunch of money, you know what? Put some chips in your pocket. That way you don't lose it all. And it's the same way whenever you're looking at $12 beans, and quite frankly, $4.50 cash corn. There's been a lot of $4.50 cash bids around, and there's higher bids than that. I've heard from people in parts of the Corn Belt, granted not right in the breadbasket, but parts of the Corn Belt that are getting $5 cash corn. It's gone on out there because in the areas where we haven't got the corn, that they're also feeding a lot of cattle. I'll tell you what. Now, they're begging for corn, and don't think that that's something that's going to go away overnight.
Yeah. And you mentioned cattle there. I think let's transition to livestock. Another decent day in cattle. The box beef values, they continue their upward progression. Seems like this market is getting pretty supported. We didn't see a lot of cash activity in the feedlot country today, but we saw some early sales yesterday with the shortened week for the holiday. But what are your thoughts on this cattle market right now?
Tell you this, cattle market's been impressive. I mean, the cattle on feed report last week, 89% on placements. That's a pretty bullish number. Obviously, we've still got a lot of cattle on feed. We know that, but box beef demand is awfully stout. You look at exports last week for cattle. Whenever you look old and new, is a record. It's the largest cattle exports we'd ever seen. And so, bottom line here is that demand is very stout. It's robust, and bottom line is people are still eating these, even whenever you've got precarious times. I think part of the reason that boxed beef is so strong is be similar to the last time that we had this COVID situation. I think there's some stocking up of freezers going on. One thing I'll say is that a lot of people are so concerned about, hey, restaurant demand is going to go away. But heck, Jesse, if you want to have a T-bone steak, you go down to downtown Nashville, it's going to cost you $60 for a good steak and a good meal. You know what? You can buy 3 or 4 of those steaks that are really good quality, down to meat locker, and have 3 or 4 T-bones. And so, what did people do last time around? They bought a heck of a lot of beef. You know what? They grilled it and they ate it. And so, I actually think the beef demand is going to stay intact. People like to eat beef. There's been a fair amount of free money, if you will, floating around here in 2020. I think a lot of that money goes to eating well, because that's what people want to do, is they want to eat well.
Yeah, and that's a great point you made. And I think we're really going to see that here the next couple of weeks with Christmas coming up. Obviously, Thanksgiving this week. We're going to see more of that demand for beef, for pork, for chicken, for turkey, you name it. People are going to be going to the grocery store and buying now. They might be having smaller gatherings or whatever the case may be, but they're still going to be buying. And that's the key to watch, I think, here.
Absolutely. I couldn't agree more. I mean, I do think, the last several years, it seemed to me that your bigger holidays, there's a trend towards more beef. Even on Thanksgiving, a lot of people are cooking prime rib these days instead of turkey. And nothing against the turkey folks. It's just preference, a lot of preference situations out there. But I got to think that your demand for meat is going to be very strong moving forward. I fully believe that as people have had to transition a little bit, just in the way they're doing life, it's actually opened their budget just a little bit as far as being able to eat better at home. And so that's a good thing for those of us that are not only in the livestock industry, okay, but let's face it, corn and soybeans, I mean, what do livestock eat? They eat corn, they eat soybean meal. That's just the way it goes. And so it's good for all of us.
Very true. Pork on the opposite hand of that, pretty quiet day there, trying to decide. I think this market couldn't figure out whether it wanted to go higher or lower. I know we got some cold storage numbers earlier this week, but just kind of looking at this pork market in general and the hog market, I feel like we're still kind of stuck in that sideways range, and we just can't figure out whether we want to go higher or lower right now.
Yeah, and I would say pork is probably fairly priced. In my opinion, I don't see a lot of arguments as far as a big run up in prices. Whenever you look, there's healthy carry in the market, and there's been healthy carry in the market for a long time. I mean, and what's that been? I think that people see that there's going to be a lot of demand moving forward, especially with the Chinese. But one thing you got to be careful of is, yes, they've been in buying some pork. We know that. But they're also building the herd as fast as what they can possibly build it. So I'd be a little cautious as to think that you're going to keep these $80 marks on farther out forever. I'm not sure that that's going to happen. If I was a private, someone that was a individual pork producer, which I know there's not a ton of them out there, but if I was susceptible to price on farther out, I think hedging some of that risk off, on that $80 level, I mean, that makes some sense to me. I'm not saying that it's not going to go on up, but if you can't make money at $80, we've got problems.
That's a great point, Matt. Great point there. Any other final thoughts about the market today, just in general, or as we head into Thanksgiving? Anything out there you're seeing that you want to reiterate or we haven't touched on yet?
Well, the Dow was over 30 today for a while. Currently we're hovering around 30. The dollar's down, I won't say about sharply, but down 0.28 on the day. That gets you back down to 92 and a quarter. You get this dollar down under 92, and it looks to me like there's some serious free air underneath us. And then you see crude oil up $1.70. There's a lot of things that were going right today. It's part of the reason that, in my opinion, we're able to rally commodities back. A lot of outside support, if you will. And so I feel pretty good on where we sit, but at the same time, my take home is always going to be fairly similar. If there's profit on the table, make sure you're managing risk as best you can, because you know what? We've had a gift given to us here in 2020. We've got a lot to be thankful for here on the wake of Thanksgiving after a $3 rally in the bean market and a dollar plus rally in the corn market. If you don't do anything with it, you're not going to feel too thankful later on if these markets turn around and go the other way.
We do have a lot to be thankful for, that is for sure. Matt, if folks want to reach out to you and the team at agmarket.net to get a little bit of help, what's the easiest way to do that?
Agmarket.net. Just go right to the web. just jump on there and a lot of good technology, a lot of good. Basically, there's good technology, good research, all of our contact info, really everything that you would need is right there.
Agmarket.net, that is the place to go. Matt, appreciate the time today. I wish you and your family a very happy, safe Thanksgiving, and we'll talk again soon, my friend. Thank you.
Yep, absolutely. Thanks, bud.
Matt Bennett with agmarket.net joining us here on Market Talk today. You can find us online, markettalkag.com, and on Facebook, Twitter, Instagram. It's all at Market Talk Ag. This has been the Tuesday, November 24th edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.